Hey guys, what's going on? Coming at you with a Friday morning video. Yesterday was a rough day in the market. It was probably my worst day percentage-wise and the most money I've ever lost in a single day in my life. So that's a notable achievement for the negative side. Something just not to forget or remember. You kind of don't forget days like yesterday kind of because it gives you real incentive to hunker down, to work harder, even though a lot of things are out of control in your life, right? But when you're investing, you can take that energy and look at it two ways, basically, right? So you can say, oh, I give up, I'm scared, I quit, I lost a bunch of money, stock market's stupid, I'm just gonna hold cash. And most people that do that, they never get back in the market. And that's that, so they kind of just quit, they leave, they give up. And then there's other people that mentally can handle it, they see the opportunity, and they just keep dollar cost averaging. So that's kind of the style I do. If you look at all the greats, it's kind of what they say to do. Warren Buffett, one of his famous quotes is, be fearful when others are greedy. Obviously there's a lot of fear right now, so you should be being as greedy as possible in the market as a long-term investor. And I think Elon actually tweeted out recently saying, he's like, I got this question asked a lot, and basically saying that buy stocks you like long-term, as long as the fundamentals don't change, and if you believe in them, you'll probably have very good upside in the future with where the market's at right now. Something along that line. So, and I totally agree with him. So, there's a lot of smart people out there and a lot of people that have had multi-decades of experience investing, and basically they've been through all this before. Like, this isn't new to them. So obviously I've never been through a correction or a bear market like this for this long. It's super painful. It's like a slow bleed, but once you get through this stuff, it's probably very rewarding, I'm sure. And it gives you, it just puts a check on your resume in the market. Like, oh, I've been through this before, or it's not going to be as bad as this. So that's kind of how I look at it. I mean, it's shitty, obviously, but we'll get through it. So yesterday I did buy Shopify. The ticker is SHOP. This is a position I've been buying since September, October, ever since it got off its 52-week highs. Love the stock. It's viewed as like a mini Amazon. I like it because it's more oriented towards small businesses and medium-sized businesses. I noticed, I do B2B business as my 9-to-5 job, and I see a lot of other businesses starting up Shopify accounts and using them as a provider. So I just see it firsthand, and it gets me really excited that people are implementing it, using it, adapting to it, and they really like it. I always ask for their feedback on what they think. Never heard anything negative from those businesses. So just gets me kind of excited to buy it. I was waiting to get off the 52-week highs. I was buying it like right around 1,000 originally, which is crazy. So, and I thought that was a good deal. So I bought yesterday at 407.03. I added 15% of my cost base to my position. This is a probably a top 8 position of mine of the 16 or 17 I hold. The market closed yesterday at 413.09 with Shopify, so I bought lower than where it closed. My cost base is 679.21, so I still am down significantly, but obviously if I was buying around 1,000 originally, I've almost driven it down. I've driven it down 40%, so that's really good from where I started buying. They did miss in revenue. They came in at 1.2 bill versus 1.24. Guidance was not good. The CEO came out in the conference call and said he thinks that just the world opening up and in-person shopping is really diverting people away from the online e-com stuff, which I do agree. I think people are just excited to get out now that there's a vaccine, the world's opening up again, and inflation's really out of control right now, and people just want to travel and do all that stuff. So it definitely hurts their business in the short term. Not a big deal. If you like an evaluation of a company, you like a company, just like what, Elon Musk basically said, like, you buy it. So I've been just, if I was buying it at $1,000 and I like that for the long term, why wouldn't I buy it at $400? Like, that's silly. Like, if you really believe in your convictions, you're going to do that. So that's what I did. The CEO did also say, which I think really spooked people out of the stock, the back half of this year, he said the guidance is going to be, it's going to be less revenue than the first quarter. So that I think really freaks people out too, because they're like, well, how much less? Is it going to be like 5% less? Is it going to be 1% less? Or is it going to be like 50% less? So I don't even think they know, but they did see the forecast, and really the market really focuses on guidance. They don't really care about the Q1 earnings. They look more towards where the guidance is going in this market. So obviously the guidance was really bad, uncertain. If a CEO says it's going to be lower, like they know it's going to be lower. So that freaks a lot of people out, which is fine. I will continue to buy. The stock has not found a bottom yet. If it goes to 375, I'll buy more. If it goes to 350, I'll buy more. If it goes to 325, I'll buy more. Eventually, there will be a bottom to the stock. So I'll just dollar cost average my way down. I have no problem doing that. I'm in no rush to make money overnight, and I feel like long-term investing is the best way to gain wealth. So that's kind of my style, and that's what I do. Yesterday, the Dow finished down 3.12%. That's insane. S&P finished down 3.56%. NASDAQ finished down 4.99%. My portfolio got completely crushed. I finished down 6.60%. So like I said, I lost the most money I have in my life yesterday, so it's kind of not a good feeling. So if I have time, I'm gonna get into this. Yeah, so I do. So that's kind of my opinion on Shopify, basically my overall view on the market, where my position fell yesterday, so I got hit really hard. So I think there's just a lot of fear right now. I think it's an overreaction though, in my opinion. I think the worst is over and people are just kind of freaked out about just everything going on right now, in my opinion. So China's obviously on lockdown. They're saying they're not in a recession. We know that they're not always completely honest, and they kind of want to make, they want to to the world appear like they know what they're doing. They're the best. Their economy's fine, which it isn't. One great way of just kind of confirming that is if you look at the Starbucks earnings report and their breakdown from Q1, China's revenue was down 24% in Starbucks, whereas the US's and other countries were up like double digits. So if you're in a recession, or the Chinese are very smart, like the people are very good there with saving money and understanding that they need to save to get through tough times. So if they're in a recession right now, they're probably saving, therefore they're not spending on expensive coffee. So I think China's in a recession right now, and I think a lot of people in the market think that also. So I think there's a lot of fear there baked right now. They got to just get over these lockdowns. They got to get through all the turmoil over there. It will happen eventually. It's going to take a couple months, maybe 6 months, a year, like we don't know. Europe, they did come out yesterday and say that basically they're going to go into a recession. They weren't very hopeful on not going through a recession. They think that inflation's out of control and they're going to basically have to rug pull them. And they weren't very optimistic about the future. So that's also a negative catalyst, because we need every country to work together to have good GDP. So that's bad. So Europe's going to basically go into a recession, I said. So that's not good. Russia, Victory Day is May 9th. Who knows if they're gonna leave and leave Ukraine or continue or do whatever. We don't know. So let's just say they don't leave Ukraine, the war still goes, and there's more, sanctions on Russia, and they get pissed, and then maybe NATO gets involved, or maybe they don't, or Ukraine, just keeps fighting for years. We don't know what's gonna happen there. So there's fear in every place, just different kinds of fear. And then the US now is all freaked out because of all this going on. So if you listen to Jerome Powell's statement 2 days ago, he sounded like he knew what he was talking about. He seemed pretty confident in what he was saying. He said he's still going to go to try for a soft landing. He laid out a plan. He laid out exactly what he's going to do the next 2 months. So we have guidance. And the market reacted very well when he spoke. So I don't think that's the problem. I think it's just that all this developing is causing a lot of fear in the markets, and people just can't take it anymore. They're like, oh my God, this could be bad for a long time. So that's kind of my thoughts. What I'm doing is, I'm just, I'm buying, companies I like long-term for good deals. I'm not looking to open new positions, but I'll gladly take these shares at 400, 375, 350, 325, whatever. So long-term, I know they'll be fine once things normalize and all these, COVID fears, recession fears, war fears, lockdown fears. Once all of them go away, once inflation, we're scared about inflation too. So inflation's at 8.5%. CPI readings next Wednesday. I think it's going to be under 8.5 personally, and I think that's going to be a really nice catalyst for the market. But if it goes over 8.5, we're going down. Like the market's going down. So then they're going to be talking about stagflation, and you see all these headlines and this and that. So we don't want that, but there's fear on that too. Unemployment comes out today. But we'll see. I'm not too worried. I mean, unemployment should be under 3.6 or 3.5, whatever. Like that's fine. So, so the 10-2 yield curve, it did separate more yesterday also, which is good. So if it inverts, it means there's a recession most likely coming. It's separating, which is good. So there's a lot of good. I mean, I think there's more good than bad personally at these evaluations, but I'm only one person and, I'm not, I don't have billions of dollars. So I can't control the market. So, but yeah, that's all I got. Till tomorrow, guys. Make sure you guys subscribe. On the way to 800 subs. Much appreciated for anyone that's done that. Hit the like button, comment below. Let me know your thoughts. Till tomorrow, peace.